US markets had a relief rally for the first 3 days of this week as they digested the news that Omicron variant will not cause any major damage. And most of the markets, however, closed lower yesterday. Dow was flattish, but Nasdaq saw a deep cut of 1.7%. US markets are waiting for CPI inflation data, which is due today. Expectation is that CPI will increase by 6.8% year on year, which is the fastest in the last 30 years. Higher than expected reading would strengthen the case for policy tightening decision by the Fed. Asian markets also declined because of the US inflation data, which is due today. So global markets are today in a risk-off mode ahead of US inflation. The Indian rupee also closed at almost an 18-month low at 75.5. It is likely to further depreciate in coming months as the Fed becomes more hawkish to control inflation, and which will strengthen the dollar. Now I will ask the technical team to take it from here.
Yes, thank you, Jihan. Good morning, all of you. This is Swati. Yesterday, we have seen that the market ended with the recent gains, extending their winning strikes for 3 consecutive trading sessions. Market somehow manages to maintain a closing above 17,500 levels, which indicates a relief sign as of now. Looking towards the global market and the Asian markets, we believe that our market is likely to open on a flattish note and we might see some sideways momentum during the day. Currently, Nifty has a resistance at around 17,570 to 17,600 levels will be the resistance level for the Nifty. Any move above that level, we believe that the pullback rally is likely to be extended towards 17,700 to 17,800 levels. Whereas on a downside, from the last few trading sessions, we are continuously emphasizing that 17,400 is the crucial resistance level. Since the Nifty has surpasses that level, now 17,400 will act as a crucial support level. So any move below 17,400 level will again trigger the selling pressure or say the profit booking, which might take a Nifty towards 17,200 level. So the overall view will remain a cautious itself, but definitely this pullback rally is likely to be continued as long as Nifty sustains above 17,400 level. We believe 17,600, 17,700 level can be seen in the coming few trading sessions. Coming towards the Bank Nifty, the Bank Nifty has an immediate resistance at around 37,200 level. Above that level, 37,400, 37,600 levels can be seen. On the flip side, 36,850 will act as an immediate support level. Below that level, 36,600, 36,500 levels can be seen on the Bank Nifty. Coming towards the Nifty Finance, for today intraday purpose, 18,230 will act as an immediate resistance level. Above that level, 18,340, 18,400 levels can be seen, whereas on a downside, 18,000 will act as a crucial support level. Any move above that level, 17,800, 17,900 levels can be seen on the downside. I believe that it's a stock specific market. We are from the last 3 days, we are continuously witnessing that there is a sectorial rotation into the market. So trade each and every transactions with the strict stop losses. Stock specific, keep eye on Jubilant Food. This particular counter really looks good on the technical front. We believe it has a potential to touch the feet of 3920, 3900 levels on the higher side. Whereas on a downside, the support is placed at 3790. So one can look for a buying position into the Jubilant Food as well. I think that's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, yesterday, as I had mentioned, the very important level was the 17,500, and now the strike for 17,500, the PCR has gone above 1, which is a positive sign, and the continuous decrease of VIX from 21 odd levels to now 16 levels. It is almost at comfortable levels now. If it goes below the 15 levels, you can say, the rally will continue. However, looking at the overall data, we believe this rally is likely to continue up to the 17,800, 18,000 levels. So one can go ahead and buy. The closing basis stop loss now, shifts upwards towards 17,400 odd levels. The PCR, overall PCR and open interest still are at comfortable levels. From the stock specific front, FSL and Escorts yesterday I've seen a good rally, price volume breakout along with open interest. So you can buy these stocks along with Idea. Even Idea has witnessed a price volume breakout and the open interest has gone up as well. So look out for the same. One can go ahead and buy these stocks. Even the banking stocks are likely to witness some buying. So the likes of ICICI Bank, HDFC Bank, SBI and Axis, these stocks can witness short covering. There are a lot of open interest left in the stock, which is on the short side, and we are expecting short covering to come in into these stocks. That's it from my side. I'd like to ask the fundamental team to take over, please.
Today, the IPO of Star Health Insurance will be listing. So we had given a subscribe rating on the company. However, the company had to cut its offer for sale size to 4,400 crores from 50 to 50 crores after its IPO got a weak response, and just 79% of the issue was subscribed. Market cap will be 52,000 crores, so it's a large company. Price is rupees 900 per share, and we expect listing to be at around 5 to 10% lower than this price. Company derives 90% of its premium income from retail health insurance, where the industry itself is growing at 25% and the Star has been growing at 31%. So within retail health, Star is the market leader and has a market share of 31%. The number 2 player is ADFC Ergo, and its market share is just 10%. So Star's market share is almost 3 times that of the number 2 player. Company posted losses in last 1.5 years, obviously because of COVID, where many people were hospitalized and the claims ratio was elevated than normal levels. So we feel this was an aberration, and once COVID is behind, the company should again go back to posting ROE of around 17% on a steady state basis, which it did before COVID. However, the only risk can be that a third wave of COVID, if it comes in India, then that will definitely impact the company. So if someone has a long-term horizon, then they can continue to hold this stock. Otherwise, if the time horizon is of short term, then one can look at exiting. Thank you.
Good morning, everyone. Today, Metro Brands Limited is IPO is opening. This is the company which markets the Metro and Mochi brands of footwear. This is a footwear. So the price band is around 485 to 500. Issue would open today and would be open till 14th of December. The company, as I said, they market their footwear under their brand Metro and Mochi. They also have Walkaway as their own brand and does the marketing for Crocs also. They're also tying up with other brands like FitFlops, which would be available in India through Metro brands. It is one of the oldest company in the footwear market and has a legacy of around 65 years. They have around 600 stores all over India, and they are planning another 260 stores to be open in next 3 years. It has a wide range of brands plus products catering to all occasions across the age groups and market segments. They are also present across multiple formats and channels. Like they have an omni-channel format wherein they do have physical stores, plus they do market through their own websites, plus some marketplaces like Amazon, Flipkart, and everything. They follow an asset-light model wherein they don't do any manufacturing, and they have tied up with around 200 vendors, which does the manufacturing for them, and they keep a tight grip on the fashion and trends which are following. And the company did sales of around 800 crores in FY21, which was impacted due to the pandemic. If you see FY20, they did around sales of around 1,285 crores. We believe, and they do one of the best margins in the industry among the listed players, wherein they clocked 27% EBITDA margins in FY20, and which we believe is likely sustained, given the track record of the company and giving the asset-light model. At this pricing, the PE comes to around. We don't believe that you should look at PE. However, the PE comes at this pricing around 210 FY21 and 85 on FY20. However, we need to see EV by EBITDA or EV by sales would be a better metric to look at. We believe this company has a good potential to grow, and that is why we are subscribing. We are recommending subscribe. However, as the valuations is at par at Bata, which is a much bigger name in the segment, we are believing that you should subscribe for a long-term basis. Thank you.
Yeah, we are done. Yeah, we are done for the day. Thank you for attending. Have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.